Hi, welcome to the Market Alert for Friday the 11th of August 2017. So yesterday, starting off with the pound, we had a sell signal. The market traded down to the 129.50 level, thereabouts, and you can see the buying coming into the market, supporting prices. Market's tested and then reverses back up. This is also following the news as well, the economic news, manufacturing and trade balance figures, which were nothing to shout about, but the market then moved higher. On this bar here, prices came back down. Let me just clear that for a second. They came back down. Looked like everything was fine, but then the market moved to the upside there. So this resulted in a loss on the pound. You can see the pound struggling. What you can do when you see the buying down in these areas here, and you've got the support here, is that there's nothing to stop you from reducing the actual loss. As you can see there, let me just remove that and put that back on. Take the extend right out there. You can reduce the potential loss by doing something like this, particularly if you've got economic news coming out as well, or wait until the news is out. This signal was at 8:30, which was an hour before the news. You can see the market's going nowhere, it's waiting for the news. In the daily chart, well, it's sideways for the pound. Again, politicians are away at the moment, there's not an awful lot happening. Second week of the holds in the UK. So you can see prices are sideways there. News-wise today, let's have a look, see what we've got. Nothing for the UK, so the pound's likely to be quiet once more. Then we head over to the US. We've got core CPI at 130, CPI at 0.2 forecast. We know that's all fudged. We've got Kaplan out and Kashkari out at 240 and 430, so it's going to be interesting to see what they can do. They certainly didn't help yesterday. As we move on to have a look at the Dow, because an interesting picture is emerging here. We started off with a short, and we saw the market trade down to the scalp. We had a buy which failed because we had another short that moved in and sent the market lower. We had a buy that barely got to the scalp, or would just get to the scalp, and then we had another short later on in the session. And let's just have a look at the short in more detail, the last one. Those observant among you will notice that we've got a switch here. We've got the shorts actually winning more than the buys as well. So given that was the case, as the market hit the scalp and drove through it, I decided to trail the stop as the market headed down towards the 900 level there as well. So you'll see the market move through this, and the stop at break even. I'm just going to fast forward. See the volume building. I thought we were going to see them actually buy into the market at this level, try and bring it back. I've also marked up the 21.873 level. Again, you'll see the buying increasing in the market here. I thought we were going to hold again, but eventually we get down to the support. As you'll see, I was drawing arrows in there last night just to highlight for you. For today, you can see the buying coming in. Market comes back, doesn't hold. They're doing their damnedest to hold this at the moment, as you can see from that volume, and then eventually you'll see the market go down and hit the 21.873, then starts to go through, and again you're seeing the volume build there, and then they bring it back. Then what I go and do is have a look at the daily chart, see where the support is, and I'm drawing in a whole host of 76% retracements, and I'm just drawing these off each rising low just to see where we're going to get support. Just seeing if we're going to get down to the 21.850 level, which we did. And there you can see the market coming back to there, and this is the overnight session, by the way, but it was going so well, even though you have to give up another couple of points in the spread, that we got down to towards the 79 point area there. It broke. It had to break, because if you look back at the other part of the session, I'll just bring this down so you can see it. This is we had the sideways movement, but for some unknown reason it just looked like it was going to go, and it did. The overnight market, they're doing their best to bring it back, and what I'm looking for here, if it's going to be possible, is a break like this at the end of the session to remain short overnight as well, just in case North Korea do send something across the bows, or the US, because it's going to send the market sharply lower. Let's have a quick look at the implied volatility. Just to clarify what I said there, of course the stock will need to be at break even before even considering doing that. It's probably the best approach, as opposed to leaving 100 points on the table to try and keep a longer term position. But certainly we're going to get something where the market is going to correct significantly, and it's always seems to be done on the overnight these days, as the moves to the upside are making new record highs are in the pre-market session. Nothing to stop you from trading in those times, it's just that the spread's wider. But if you've got a longer term view, it really doesn't make that much difference. But it's nice to have a nice cushion of points on the table beforehand. So yesterday you can see the volatility, as I said before. When it goes, it spikes, and you can see how it spiked yesterday. We had the 2 days at 812, and yesterday, I can just get the label on it, we had 1096, so the market moving up sharply for yesterday. In this down move, we're coming off the lows down here, so around 14 we would see some support coming into the market. That's 14%, which is a 100% increase in the implied volatility of these lows, 14 to 15. We've not seen this for a very long time, and if we do see the Koreans or the US breaking out their armaments, then or any sort of attack, and you're going to see this move very high indeed. Now, just to put this in perspective, let's have a look at this 10-year of implied volatility. Let me see if I can just slide this over a bit, and there you can see what happened in 2008. You know, we're at the 75% level. You can see there's absolutely nothing here at the moment, but in the 3-month chart, of course, having had the record lows down at the 6% area, you can see this is neither here nor there when we look at the bigger picture of what potentially is around the corner. Right, that will do it for today. Heading into the weekend, let's see what happens on the geopolitical front over the weekend and today in the pre-market session. At the moment, all quiet on the Western front as far as that's concerned, and let's hope that it remains just rhetoric between the two and neither launch any sort of preemptive attack. Right, that will do it. Have a great weekend. As ever, thanks for watching. See you in the next one.